Well, welcome back to Power Lunch today, ahead of the MPC discussion, which will be announced later on today, where we hear whether or not the local South African Reserve Bank will increase or keep interest rates unchanged. We're going to take a look at some expectations, especially from the likes of Dr. Adrian Saville, who is Chief Investment Strategist at Citadel. I nearly got that wrong and referred to that other company, but that's okay. I take it is quite split, especially following the inflation reading that we got out just yesterday.
That was a big surprise, and just before that inflation reading, the market was more or less 50-50 as to whether there would be a hike or no move. And with that much lower than anticipated print, it's moved in favor of no interest rate hike. That's what the market says. That's what the market says.
Yeah. Adrian, Lindsay and Cape Town, there's two things here. Reputational damage because of the very hawkish commentary from Lesetja Kganyago after the last meeting, which was, of course, an unchanged decision at 5.75% for the repo rate. The other thing is, of course, that it's nothing to do with growth in South Africa. They are not the custodians of growth. They are custodians of monetary policy and the rand, etc., and inflation. So, of course, there's going to be no rate rise today. After that 4.7% print, everybody, very clever people were telling me 5% and we're going to 7% within 6 to 9 months, but not a bit of it.
If you look backwards, Lindsay, there's a lot of evidence that you can bring to an argument that says no rate hike. And the evidence would include a currency that's stabilized. South Africa is vulnerable to imported inflation and currency has settled down. The current account deficit is still in firmly in negative territory, but it's improved significantly versus a year ago. Inflation has come in lower than anticipated. The electricity price hike that was requested hasn't been acceded to, so that inflation risk has gone away. Wage settlements have been closer to CPI. There's a number of good arguments that I think can be brought that says no rate hike. But I don't think we should be looking backwards. I think we should be looking forwards. You can't control numbers that are already printed with today's interest rate decision. And if we look forward, I don't think the evidence has changed or the argument has changed that we're going above 6 on core and headline inflation. It perhaps is a little less aggressive than was the case as recently as yesterday on the back of the information that we had. But we're going above 6. You're absolutely right. The South African Reserve Bank's mandate is to be custodian of currency. And if we take out, if we put in judgment what they should do, I think they should be hiking this afternoon.
I agree with you on that front, and maybe stay away from what Lindsay was saying, because we also recall the last speech that they had, as Lindsay alluded to, was very hawkish, and they highlighted the US, that they're monitoring that very closely, and why wouldn't they want to hike just ahead of the US, which could potentially hike as early as September?
And this is where the famous dot plot comes into the conversation. If we go to Janet Yellen's most recent testimony, it was very clear that they remain on track to hike. The phrase that's being bandied around is sooner but slower, which I think by many accounts would be really good news, because the sooner we can get back into an interest rate environment that starts to resemble something closer to normality or rationality, the better. And as things stand, the Fed, under Janet Yellen, has reiterated their commitment to hiking. And I think she's playing a bit of poker and trying to spook that it will be this year. Whether it's this year or early next year, the tone of the most recent MPC announcement, South African MPC announcement, and the anticipated inflation story, as well as the rate hike to come out of the US, I find it hard to escape the conclusion that they should be hiking.
Adrian, just very quickly on the rand, it's currently 12.41, 12.42 against the US dollar. If they do hike this afternoon, 25 basis points, what will the rand do? Will people say to themselves, well, I'm a yield chaser, so this is fantastic. I've got a 6% repo rate, so let's get into that South African rand. So the rand comes back to 11.75, 11.80. Or do people say to themselves, well, this is actually regressive. This is a sort of pessimistic interest rate hike, and therefore we're going to sell South Africa and it's going to go to 13. Which of those two scenarios would you embrace?
those carry trades that you're making reference to aren't here for economic growth, they're here for yield. And at face value, if the interest rate goes higher, yield will go in their favor, and that should help the rand strengthen. There's nothing other than a 0 or 25 debate on the table. So I think we can wrestle with just those two scenarios. I wonder if there isn't a rate hike, if they keep it at 0, if it's not so much about the yield not materializing, but confidence being lost in the discipline of the Reserve Bank to look after currency as their primary mandate. There's at least two reasons then that I think we should be hopeful that there is a rate hike as opposed to thankful that there wasn't one as debt holders.
So quite a close call, but...
It's 50-50.
50-50, a tight one that we haven't seen in quite a while.
That's a proper economics answer.
Well, we'll keep you with us for a moment as we take a look at other people who are speculating as to how the interest rate might move today. And let's take a look at some of the individuals that our team members spoke to early on today. Bridget Taylor, she gave us her guess as to which way the currency, or rather interest rate, might swing.
Well, I think that the market was a bit surprised yesterday by the CPI number that came out. I mean, it did come out slightly better than was expected. The market has been expecting to see inflation start to deteriorate back towards that 6% upper end of the limit. However, you know, that number obviously then did put a little bit of a spanner in the works. I think, you know, if you look at things like droughts that we're experiencing with regards to the effects on the food prices coming forward, we've also got the NERSA increases that will start to play in terms of consumer spending and production costs, etc. So those still are a concern. However, I think that that inflation number just put a bit of a spanner, just because what it did say is they may, in fact, err on the side of caution. However, on the flip side of that, what we have to keep in mind is that we can expect to see the Federal Reserve out of the US and the Bank of England hike towards the end of this year. And in fact, the September meeting for the Fed is actually before our next MPC, and we certainly don't want to be seen to be behind the curve. So for now, you know, the market's a little bit confused, and I think that you've seen quite a lot of receiving pairs on the FRAs, which is the FRA market, or the short-term interest rate market, just as a result of some that were calling for 25 basis point hike, potentially taking that off the table for now. So it's going to certainly be a very interesting MPC this afternoon.
Sounds like Bridget Taylor agrees with Adrian, saying it's an interesting decision to be taken today. Well, we also tried to get Finance Minister Nhlanhla Nene's 2 cents about today's MPC. Here's what he told us.
We have a convention with the governor. He doesn't comment on fiscal policy. I don't comment on monetary policy. That's the independence he has and he enjoys.
Seems like he dodged that one, but interesting times, no doubt. We will bring you a live broadcast of that MPC interest rates decision from 2:30 Central African time today on the channel. Well, a big thank you to Adrian Saville for joining us today. Thank you so much, from Citadel, Chief Investment Strategist there, giving us his thoughts on the MPC interest rate decision.